Morning, and we are and we're live. Good morning to everybody. Thank you so much for joining us this morning on Behind the Markets as we go through Wealth Wednesday. And a good morning to you, Stephanie. How are you doing on this 8-degree morning? I'm going to stress that again, 8 degrees Celsius morning. How are you doing?
Oh, wow. I'm doing very good. Firstly, obviously, I would have been sleeping, but of course, the cold ish. But I'm okay. I guess I'm okay.
I embrace it, Stephanie. This morning as I stood in that shower, I embraced it and I said, I'm gonna take a cold shower. And that was my that was my mindset. So to take your hands away from the hot water and go straight to the cold water, that's a wake up call and a half. That
I wouldn't do that. I wouldn't do that. I tell you, 1,000 ways to die right now.
I'm on 53 days now, 53 days straight. But anyway, that's another story for another day. Welcome people to Behind the Markets as we go into the Wealth Wednesday stories. We've got a couple of stories on hand, all the way from inflation news, going into debt news. We've got some news on the latest debt figures of the national debt and where we stand and who's paying, who's minting off of it. We've got other stories based on maize, and finally we've got our topic of discussion, which is inflation hedging with diversification. Inflation hedge diversification and what we call risk balanced investing. So everybody really want to tune into that one to look at how to select a portfolio of assets based on how you should actually balance it up and also the process with which diversification happens. But thank you very much to everybody. Let's get into Wealth Wednesday and the data as we go first into market data. What we saw yesterday was the Kwacha continued to slide down 1.53% against the US dollar. We saw the US dollar rise up by 1.53%, mainly on the continued sell off of the Kwacha after the debt deal as we wait for the private creditors. And also the expectation that our interest rates may not be high enough to meet the thresholds that international bondholders want right now. But there is some good news which we'll go into which we're going to tap into. From our deep dives, we've actually picked up that bond vigilantes are actually calling the shots in emerging market economies. Countries such as Nigeria and Turkey have actually experienced flows coming in from global bond investors because they've turned to orthodox economic policies. They've gotten rid of subsidies. They're starting to manage their monetary policy properly. And once they've started to run their economies properly, they've actually seen a lot of flows coming in through their bond market. So those are positive signs for countries like Zambia, that if Nigeria, who's still at record levels of inflation, can still attract investment coming through its bond market, even Egypt as well, then even us switching to more orthodox policies should actually see that once we conclude our final leg of our debt. Remember, the big one was the official creditors. Now we need to deal with the private bondholders who have also kind of started to step out on their terms. And we're going to see how that goes. Remember, the expectation is that we should be seeing a conclusion to that sometime in the next month because they were waiting for the official creditors, but meetings have already started. Kwacha is down 3.38% also against the week. This is a rapid deceleration of the value of the currency, and it's actually getting quite harsh because it's a serious snapback. So meaning we haven't rebalanced yet, and we've also got 30. But on 30 days it's down 9.48%. Obviously on the sell-off that happened on the news, and year to date the Kwacha is up 1.2. Sorry, the dollar is up 1.28%, meaning the dollar is actually in buying posture. Stock market was dead quiet yesterday. No activity, not even a single trade happened yesterday in the stock market, while our bond market moved up 0.06%, while our bonds in dollars were down 0.29%, and interest rates dropped below 24.18%. Now, looking at the year-to-date numbers, you're looking at the rand as well, which was up 3.89%. This is bad news for cross-border traders because once again, we've got this huge rand volatility we've been dealing with, up 3.71% from just on the week, meaning that if you're a rand trader, if you're going across to South Africa to buy products, whatever you're buying has just gone up by 3.71%, and then you're going to have to bring it back here and then adjust the price into your buyers by 3.71%. That is actually quite a little bit of harsh inflation, especially if you're not buying anything that's perishable. People expect the prices to be the same, and therefore you're going to be caught with inventory problems. So cross-border traders who go across into South Africa are expected to have a little bit of a problem there. 9.1% for 1 month trading, that for 1 month on the 1 month 9.11% is where the rand is down on the month. So you can see that if you're a cross-border trader in South Africa, you've just towards South Africa, you've just experienced a 9% drop down, and you've experienced a 3% rise up just in one day. This is a highly volatile environment for you to do business in. And this is why people say when the currency moves down, it's very difficult for them to change their prices downwards. Because what would happen if 30 days ago you went and bought products from South Africa, dropped the prices down to match the exchange rate drop, and then all of a sudden it bounces back by 3.71%. Now you're short for your next inventory purchase. Do you see where the problem starts to come for a lot of these traders? So they have to factor in that volatility is still playing against them. Also, remember that South Africa is our biggest point for imports for our finished goods. It's our biggest point also for inputs for manufacturing. So even manufacturing companies are not yet able to curb prices yet because they are seeing these price problems happening in South Africa. But year to date, the rand is still down 7.96%, and you can see how that will affect the industrial sector. So I don't see inflation in goods and in goods coming down anytime soon until we get that South African exchange rate under control. GRZ bond index up 14.07% as of yesterday, up to 1072 at new all-time highs. While we're seeing that the GRZ bond index in USD is still on its downward slide as the kwacha is getting weaker and weaker, down 0.29% yesterday, but up 12.73% year to date. And you're also seeing that the GRZ bond yield was down 0.0002%, up 0.53% year to date in terms of interest rates. So interest rates are still on an upward trajectory, but remember, internationally, they're expecting bonds from international countries to still be registering around 34%. We're only doing 24%, so we're still undercutting what the international rate is. Now, if you're looking at copper was down 0.33%, but there was still hope that the Federal Reserve will actually try and increase. The Federal Reserve will try and slow down its rate hike or increase the speed with which it concludes this rate hiking cycle. Now, the biggest news that's going to affect us all, oil prices are up 79.34 to 79.34, up 2.12% just yesterday on the positivity that the Federal Reserve will actually start slowing down its rate hikes, while at the same time we're expecting China to inject stimulus into its economy. Now, those are kind of dodgy lines that we're kind of coming across here. So that 2.12% means that oil inflation may start to kick in. And you do expect probably another price hike if we continue down this road where the exchange rate is moving upwards, oil prices moving upwards, because on the last 30 days, oil prices in the global economy are up 6.08%. We have not yet seen the fruits of the blending conversation that our Minister of Energy and our nation has been supposed to be doing, or supposed to be blending ethanol. We have not started to see whether that policy has started to be implemented. What are the changes that are going to be about it? What are the timelines we should be expecting from it? I know it's not a microwave pop in the oven. We should expect the results tomorrow, but I think the updates need to continue, I think, from our ministry, our energy ministry, about where we are sitting, because we need to know, obviously, whether now the ethanol prices domestically will start to affect the oil supply chain. And even the ERB hasn't mentioned anything about that. So radio silence in that area, we need to know. But then obviously, remember that we're trying to work on structural changes. I always tell people, second half of the year, expect oil to be more expensive. Oil is only expected to come down globally after 2025, especially 2028. That's when we're expected to see lower oil prices, but higher copper prices are only expected to kick in after 2025 due to now the rapid takeoff of the EV sector and obviously the deficiencies in the copper mining sector. We did see gold in dollars up 0.19%. Uncertainty is still the order of the day, and that is keeping the gold price up. Now, Bitcoin went up yesterday a little bit by 1.71%, slightly, mainly because of the kwacha, but also slightly because cryptocurrency is still trading at about $30,000, at about $30,400, mainly because of the positivity and underlying the potential BlackRock ETF. Everyone is still holding on, and also a lot of Bitcoin traders are actually taking their coins off the market and putting it into the wallet, meaning there's a lot of holding going on, which usually pushes the prices up of things like Bitcoin. Ethereum also up 1.4%, mainly due to the Zambian Kwacha movement, while gold is up 1.72%, mainly due to the Zambian Kwacha movement negative, but also slightly due to the positivity of gold and the global uncertainty that it's still picking up. So year to date, here's where we still stand. Bitcoin up 85%, Ethereum up 58.5%. But remember what I said about cryptocurrency, highly volatile. Today, we're going to be talking about risk balancing. So I want you to really put your thinking caps on when we start talking about blending assets. The other thing that we also saw is that gold is up 7.5% generally, but adjusted for inflation, it's down 0.1%. USDs are down 6.3%, adjusted for inflation, up 1.3%, while you're seeing stock market is up 12.1%, and the bond market is up 14.1%, meaning the Zambian markets are currently sitting in a very defensive position. Now, in terms of our four horsemen, let's finally take a look at where we are in terms of inflation, interest, international trade, and industrial demand. These are the four horsemen that tell us how the global economy is actually doing. The Namibian inflation yesterday slowed down to 0.1% month on month and 5.3% year on year. USD API weekly crude index, crude numbers showed that the crude stock rose by 3.02% in US inventories. That should slow down prices going upwards, but right now we're dealing with mainly potential stimulus in the economy. German CPI yesterday also rose up in inflation 0.3% and up 6.4%, while South African manufacturing declined by 1.3%. And therefore slowed down South African year-on-year manufacturing output by 2.5%. That's really important because the less things coming out of South African products, coming out of South African factories, the more expensive they're expected to be. So your hair care, your cleaning products, all those things expect to be more expensive because South African production is basically the backbone of Zambian consumption. That is a sad story, but that is the reality. Now, we're also seeing that new loans coming from China rose by 3.05 billion Chinese yuan. Outstanding loan growth grew by 11.3% year on year, meaning Chinese capital is starting to come out faster and faster. So remember, we talked about this, that we're starting to see some stimulus coming out of China. That should stimulate economic activity. German bonds auctioned higher. That's not some good news for us, while US bonds also auctioned higher. So we're seeing interest rate pressure from the main economies is still rising. So that's not good for the expectations of lowering interest rates should we get international investors to get back in here after we get our creditor negotiations concluded. While we also saw UK average earnings up 7.3% faster than expected. That also brought in some optimism. We saw UK employment slow down to about 102,000 jobs created over the last 3 months. And we also saw that EU economic sentiment was in the negative, with US Red Book, in other words, retail sales in America declined year on year for the first time since September 2020. So that shows how long this has been a problem now. We also saw that Italian industrial production did pick up to 1.6%, but year on year it still slowed down, but at a lower pace of 3.7%. So we're still getting mixed reads here. Inflation is starting to look sticky. Inflation is no longer looking like it's absolutely coming down. It's now starting to look like it's stuck at certain areas, and it's starting to resist and bungle back up a little bit. Interest rates are still maintaining high, but more capital is getting back into the major economies, while growth in the economic sector is really still looking soft and slow. And industrial growth, though it is starting to pick up, is still soft and slow. So that is our market outlook that's our market data showing us that we still have a weak kwacha, we still have a defensive market, and we have a global economy where inflation is still sticky, interest rates are still high, and international trade is still coming out the box very slow. So growth is not the order of the global economy. So everybody still has to batten down their hatches for the next 2 years. I still say up until 2025, we're still going to see slow economic growth and relatively sticky inflation around the world. And because of that, interest rates are still going to be relatively high. Expect the benefits of probably all these creditor negotiations to kick in after 2025, when we start to see that EV sector take off and we start to see the benefits start to come into Zambia. Manage your expectations, people. Manage your expectations. So what do you do in that period? You buy up as much of your fixed income that comes in at high interest rates and start to slowly diversify into dividend paying stocks. That's the strategy I always tell people. In this high inflation, low growth environment, slow growth but high inflation, you gotta make sure that you buy up as much fixed income and slowly diversify into dividend paying stocks with purchasing power. You're looking for stocks of companies. You're looking for the equities of companies that have purchasing power in their industry, pricing power, not purchasing power, pricing power in their industry, meaning that if they increase their prices, they're not expecting less sales. So those people who are either essentials or they're almost monopolies in their industry, those are the people you are likely to see who are going to still maintain a very strong position. 6 months results should start coming out sometime in the next month. We will start getting the first trickle in of 6-month results of listed companies, and we will start analyzing that going forward. And that is our first roundup. And going into it, Stephanie, we do now have our daily deep dives. And these are some of the stories that we've captured, especially thanks to our news team. Thank you very much. As I say, I always like to thank our news team. They take a burden off my hands. They do. Now, getting into some of the stories, we did see that JCTR announced yesterday. We got an announcement in yesterday's news that JCTR did report that the June monthly food basket rose to 9,239.45 for Zambia. That puts us at the June 2023 food basket rose to 9,239 for Lusaka, not for Zambia. And that was a 1.77% increase in the cost of living for people in Lusaka. So that also pushed, and that was mainly driven by the price of items such as beans, cooking oil, bananas, and fresh milk. So you can see it's really food prices that are still sticky upwards. So though in the main inflation index we started to see prices come down, we did see also grain prices are still highly elevated. One of our other deep dive stories that we also want to capture, obviously as a segue, is that we did get a story from the Minister of Agriculture that 800,000 tons of maize, that's 800,000 tons of maize, of planted maize, were lost due to heavy rains. So I think we talked about this earlier this year, that one of our biggest worries with food prices being able to come down was that those floods are probably knocked out some of the crops. Okay, so those prices have knocked out some of the crops out there. So what that does is that it elevates the price of things. So that's what we really have to watch out for. So it does look like as long as we have those heavy rains without irrigation systems, and this is why irrigation is extremely important. The moment we start relying on heavy rains, and a lot of our peasant farmers who are basically produce over 90% of our maize, when they start getting knocked out by floods, as we were saying, the problem is it was flooding everywhere except for the Kariba Dam. But anyway, that's a different story for another day. But as long as we were experiencing those heavy floods, we were probably going to see some of the crops not coming out. And when you start to see that, expect that season's maize prices to still remain elevated. Then on top of that, you also had the head of Millers Association also say, unfortunately, added to that, there's high demand from traders. Okay, so traders are also trying to buy up as much maize as they can. And why is this also happening? Remember that you've got regional demand. You've had droughts in Kenya. You've had shortages in DRC. So whether it's for smuggling, whatever it is, there is still international demand for Zambian maize. With 800,000 tons not on the market, you're expecting that a bag of mealie meal was going to push the price, was going to push upwards. And that starts to push the price of everything upwards. In addition, you have elevated transportation costs. So add all three factors together: cost of transportation up, demand up, supply down. So supply down, cost of production, and cost of and demand upwards. All three of these factors converged, and they've squeezed mealie meal prices to the record levels of 205 kwacha. Now, that's what we had on the last CPI read. So this tallies up also. So I'm going to add mealie meal to that. However, JCTR did also cite that that vegetable prices did decrease. Obviously, in this season, we usually do see vegetable prices start to come down as well. Fruit prices also decreased during this period, but notes that non-food items such as charcoal also saw price reduction. So a reduction in price from 750. With 290 kg bags decreasing by 50 kwacha from 750 to 700 kwacha. So I was just catching the news there. But what they also cited was on a national level. So you also have to remember, Lusaka people need to also remember, we don't reflect the country. Yes, our population as the city is about 10% of the country, which is one of the reasons why there's massive inequality, by the way, in this country, that there's a huge concentration of people in a tiny, tiny dot. Lusaka makes up less than 1% of the landmass of this country, but holds 10% of over 10% of the population. Actually, we're even above 15% of the population. This is an overcrowded city. It's overcrowded, people. In fact, this is one of the reasons why my biggest argument with I know the moment you say climate, people, they'll start saying, "Oh, so you're a climate denier." No, I'm not. I'm pragmatic. One of the problems I have with that argument, Stephanie, is they when they say the world is overcrowded, there are too many people. Actually, there are not too many people in this world. The problem is people are heavily concentrated in dense cities. They're densely concentrated, let me say, in a few select cities. So if you ever, by any chance, just drive out. I remember the first time, Stephanie, I went to Solwezi, and I took a drive from Lusaka all the way to Solwezi. That is a drive for the brave, people. What I mean is just the distance. But I remember I took a drive all the way to Solwezi. And I remember just after leaving Chingola, I remember passing a hill. And there was this guy just standing out holding a goat, drinking a carton of chiwuku. And he was just, this is just a quintessential Zambian picture for me. And I asked him, like, and I stopped the car because I was really interested. I was intrigued. I was like, "Dude, you stay here?" He's like, "Yeah, I stay here." I was like, "This," and like, "Where's your house?" So he points at a whole hill and he says, "All of this is my area. I stay all of here." And I'm like, wow, a man has a hill to himself. Then you realize that when you leave Lusaka, you start to see how much space people have. People are actually quite spaced out when you actually leave Lusaka. And you see this actually around the world, that when you move out of your city, of those densely populated cities, I used to see this even in rural South Africa. People would have a whole stretch of hill to themselves. Because once you leave the cities, people are actually leaving relatively spaced out. So urban parts of the world are overpopulated. In fact, what we're struggling with is not overpopulation, it's dense concentration. There's too much happening in Lusaka and Copperbelt. This is why policies like decentralization are extremely important. Because here's what they point out as well, even in this JCTR study, that the cost of living for the average family in Zambia, when you now average out the rest of Zambia, is 6,466. So if you think about that, that means that the cost of living outside is much cheaper. And I've seen this, by the way, with my clients. I say this because let's say I've got a young teacher or a young nurse phones me up and says, "Munyumba, I'd like to start investing some of my savings in bonds." I'm like, "How much are you earning?" They'll tell me, "Munyumba, I'm earning about 6,000-7,000." And I'm like, "Okay, so how much is your cost of living?" "Well, I spend like $3,000 a month." You see what happens? Like they're living out there, spending much less, so therefore they have much more disposable income. You'll find that a teacher or a nurse earning 6 to 7,000 outside of Lusaka has more money to save and invest towards their future than a banker earning 20,000 in Lusaka. You'll find this kind of situation actually happening. So what you find is that you have to be careful where, and this is why if you're young and you're going into standard professions, I know that we tell people that if you're young, go into STEM professions: science, technology, engineering, mathematics. The only problem I have, and I say this, is that most, if you're looking at the university population, that combined group makes up less than 6% of people in university. But those are the highest paying degrees, by the way. Science, technology, engineering, and mathematics. These are the highest paying degrees, or the highest paying skill sets in the country, according to Labor Force Survey 2021. Okay? These are the people who get paid 9,000 average, at least, meaning that on general, these people get paid a lot more if you do those degrees. Now, unfortunately, the people who are now doing degrees in, now most people will do degrees in health, education, and administration. So we call those HEAL. So you have to put the two categories of work together. They STEM, science, technology, education, mathematics. HEAL, health, education, administration, and literacy. If somebody has picked that up, please write that in the comment section. But you'll notice that if you're doing HEAL courses, you're not going to get paid as much. So here's the trick: if you're going to study HEAL courses, make sure, if you can, if you are going to work for the government, opt to get posted outside of Lusaka. Okay? Get posted outside. Because if you get posted outside, you are more likely to be able to save a lot more money. And a person who can build up disposable income in their 20s, and especially their 20s and 30s, if you sacrifice the party life and the fun life and the lights of the city of Lusaka in your 20s, and you use that period to build up your wealth reserves, you will have a much better and more stable life, especially going from 40 upwards. Okay, and you're more likely to stay out of trouble, by the way. You're more likely to stay out of debt. You're more likely to stay out of trouble. All the young clients I have who are operating well are people who live outside. The people who are less than 29, it's a high number of them live outside Lusaka. And therefore, they're not subject to this 9,000 cost of living, which is majority housing problems. It's housing costs where they're struggling with. Because you hear somebody who maybe stays in Western Province will tell you, well, the house I'm staying in, I'm paying 950. Now, you think about 950 for a place in Lusaka, and and the quality of house you're talking about is intense. But when you think about 950 in some of these areas, those are 2-3 bedroom flats that people are able to now get into. So those you see how that change affects people. So if you're going to do heel work, which is the lower paying work, opt to exit. If you have that option to exit, take it. Because your 20s will be spent accumulating the wealth that will give you the base and the freedom to truly embrace a better 30s, 40s, and 50s, as opposed to getting into your 30s, struggling and fighting, and then battling through it, trying to now build a family through that. This is something I wanted to point out, especially based on that story. Now, she did also point out in the story that the average salary in Zambia is 4,000. The average individual income is 4,215, meaning that the 6,464 food basket for the average family around Zambia is still way below, it's still way above the average person's earnings. So meaning you do get about 1.6 incomes per home, 1.7. So the average household in Zambia probably, and we just usually average this out, makes somewhere around 7,000 kwacha, while the cost of living is about 6,400. So they have a disposable amount, probably about 500. That's probably what's remaining in the average household in the country. That is the real picture of what is happening. Other news, Stephanie, as we did already tap into the Mays story. Other news that we also saw yesterday was GRZ bonds make up 67% of government interest payments. So who is making money off our external debt? It is domestic bondholders. So I'm going to share quickly a visual or the table that we actually picked up from this data of what's happening with GRZ bondholders. And hopefully you're able to see this. This is a snapshot of what the government table of interest is, financial charges on interest. And you can see that out of the 32 billion kwacha, 32.6 billion kwacha that our government was paying in interest payments last year for 2022, we saw that interest to GRZ bonds was 22.8 out of the 32.6. So this is why I keep saying, if you're a bondholder, that's the fastest way to actually extract money from the government, by actually holding GRZ bonds, because they actually hold on to these payments. You did see that this is up from 17 billion kwacha from last year. So you can see this is about 5 billion kwacha, up almost about 20 to 25 to 30% upwards from where it was last year. Treasury bill interest rates are pretty much the exact same as where they were the previous year. Interest on bilateral debt is actually even less. That's actually dropped. Servicing fees on bilateral loans dropped, while servicing fees on multilateral loans also dropped, and interest on multilateral debt dropped from 900 million kwacha to 610 million kwacha. But you can see that 2/3 of government debt payments were going to bondholders, and if you calculate bondholders plus treasury bill holders, we're looking at an amount higher, about 29 out of the 30 billion. That's over 90% of payments of government debt or government interest payments government interest and debt repayments were going to GRZ bond and treasury bill holders. So the best, as I said, these were the people who cashed in. Now, if you're looking at cash given back to investors, that is much higher, Stephanie, much higher than you even see dividends in stocks. So if you want to understand why the pension industry is as high as it is right now, why the pension industry is skewed towards fixed income, is because they're getting more cash flow coming from government bonds than they are getting from dividends from stocks. So I think that's one of the biggest stories that we all want to pay attention to in terms of where wealth returns are coming from. Now remember, this is also repayments as well. This is not just interest alone, but it is also additionally repayments. Okay, so we actually are seeing that that's some of the major stories actually coming out as well. Now, some of the other stories that we did see, obviously, the debt stock of the country did rise by 3.2% to $27.1 billion from $26.9 billion, according to the Minister of Finance in the financial report for the year end 31 December 2022. And obviously domestic arrears, central government debt stock was up 9% to 210 billion kwacha from 192 billion kwacha. Obviously that is due to rise in treasury bills. The bond market did not rise in terms of debt stock. It was the rise in treasury bills that actually pulled that up. And you can see that the biggest part of that. Now, they did say with regards to the insurance and pension sector, they did say that the financial report shows that the insurance and pension sector grew by 18.3% to 12.8 billion from 10.84 billion, mainly due to their investments in government bonds. Now, part of it, yes, in terms of their listed equities, but the main driver of the pension growth has been investment in government bonds. That has been the main driver of that. Now, some of the other stories that we did pick up from yesterday's news cycle, just to round up our daily deep dives. Sorry, before we get that, some of the other main stories that we do round up on in terms of our main news cycle is Kenya is one of the countries that collects the most in terms of the biggest share of taxes. I think you reported on that story yesterday, Stephanie. But Kenya is actually, we did get the story that Kenya collects 40% of tax on fuel, 40% of what every Kenyan pays. So are you able to hear me? All right, fine. Yeah. 40% of what every Kenyan pays at the pump is just taxes alone. So the Kenyan government is making up for those subsidies. This is the warning we were issuing out about subsidies. That the moment, when you start paying subsidies, just know that somewhere down the line, the government is going to come and collect that money back through fuel. So I think let's just have a realistic picture of the fuel price as opposed to trying to get the government to start doing unsustainable subsidies, because what the problem with subsidies is they drain the FX reserves of countries. Nigeria was paying about 90% of its revenue towards fuel subsidies alone. This is why they had to get rid of them. They were just unsustainable. As we talked about, UK wages did rise. China signals more economic aid for its property sector, which is supposed to help bolster our copper sector as well. We also saw that now Malawi wants to join Zambia in its Electricity Corporation of Malawi has actually put forward a proposal to increase tariffs by 69.7% over a 4-year period. Does that sound familiar, Stephanie? Does it not sound familiar that Zambia has just done the same thing over a 5-year period? So even they are trying to attract capital towards their economic sector. And finally, Foxconn pulls out of its chip-making deal with Vedanta. Vedanta, who wanted to try and tell Zambia, we could possibly put a chip factory in Zambia if you give us our mine back. So that part has also drifted away. So on the main news, one of the things I'd like to point out is it appears, Stephanie, that Zambia was ahead of the curve, that we were actually making some good decisions when it came to our finances. Now, I want to just quickly go through, I know for the purpose of time, I want to go through, I'll figure it out today. 20.71%. What does that stand for? That is the country risk premium. This is the latest bond rating and the appropriate default spread on local government bonds as per Moody's. This is according to NYU Stern. So whatever people are getting in America, they expect 20.71% more when they come to Zambia due to our default status. And I believe that we're probably going to see this number go up because of the interest appetite coming up. And 26.65% is equity risk premium, meaning that is the latest bond rate. This is now what we add in terms of the latest rating for if people are now going to go into the private sector and equities. They're going to expect 26.65% more than they get in their market if they are to come to Zambia. Chart of the day I want to show you is the pension portfolio of our country. Now, remember that we saw that there was the reading of pensions that people were paying attention to in our chart of the day. That should give us our main topic here. Is government bonds are making up 32.87% of pension industry investments. This is the pension market that's sitting at about 12 billion kwacha. Private and occupational pension, 1/3 of portfolios are sitting in government bonds. 2.58% are sitting in treasury bills. So when you really look at that, 1 in every 3 kwacha contributed to a pension scheme is sitting in the treasury bill and bond market. Stock market is only holding about 18.82% of total pension fund holdings. Collective investment scheme investments are 6.02%, and unlisted equities. Property is about 13.25%. Term deposits in banks are about 15.153%, corporate bonds about 2%, and offshore investments about 6.24%. So what does this tell you, Stephanie, about how to invest? Have a large base of fixed income, especially in this high inflation, unstable economy. Have a large base of fixed income, which is bonds and treasury bills. So why people have I been stressing Zambians to start building a base of government bonds? Or as a former practitioner in the pension space, I saw this firsthand of the transition to holding more government bonds and fixed term. Now, you, Stephanie, as an individual, cannot go to a bank and get a good interest rate because you are not a corporate investor. You have to have probably over 1 million kwacha, according to most banks, deposited to be able to get the corporate rate. That's why pension funds are able to get put so much money in term deposits in banks, because they get very high interest rates equal to treasury bill rates. Okay, they're actually able to get very close, if not equal, to the 364-day treasury bill rate. We used to negotiate somewhere between 182-day to 273, but they can get as high as a 364-day treasury bill rate. However, that 32 that is then going to accompany the government bond rate. So now that's also because they hold high liquidity needs also in the pension industry. So when you add up the total fixed income portfolio, money markets plus bonds, you're looking at about 47%. 47% of the wealth portfolio sitting in the pension funds is being held in term deposits and government bonds and treasury bills. And then you're seeing the part that's now holding as equities and listed collective investment schemes plus listed equities, that's now being held at about 25%. So you can see that then property comes in at only about 13%. And then later on, that's when we start looking at offshore and all these other small parts. So you're really looking, if you're looking at the way to, the bigger you get in your investing game, start to have a look at this picture. I always advise people, start by building your bond portfolio. When you get to a certain level, start to spread out into these other parts, because this pension industry is working with a lot of wise investors who understand how this industry works. So I just wanted to give people this snapshot of what we call balancing, and they're balancing returns and they're balancing risk. You have to understand that they're also keeping this, because they've got a strong liquidity profile or liquidity needs, they're balancing risk very well. And I wanted to leave that here, and another time we'll go deeper. In our next Wealth Wednesday, I'm going to go much deeper into creating a risk balanced portfolio. But in today's Figure It Out, and chart of the day, I wanted to tell you that we are a high risk economy. And in that high risk economy, you often see people going highly fixed income, then going into bonds, then they'll hold some property as well. And that's kind of the broad way you want to look at it. But you don't start that way. You eventually grow that way. So you start with high fixed income, then you go into some stocks, build some property, and then when you've got these three strongholds, you have the majority of it as bonds, part of it is stocks, part of it is property. That is a very good way. It's very close to what we call the risk blended portfolio, where people are actually able to see that you can actually get a very strong risk blended portfolio, and I'll get into that at a much better time. But for the purpose of time, Stephanie, let us actually then slow down, and we are closing out for the day. Just want to give a shout out to the people who've joined us today. Just some of the comments here. Rodwell, cold shower, Munyumba, no. Yes, Rodwell, yes, in an 8 degrees Celsius. Take a cold shower. You'll never feel alive. You've got Mubanga Matthews, who talked about STEM versus heal. Thank you very much for joining us. You've also got our boy, Joy Sakala, who had said, good morning, enjoying the show from Chipata. I had to run away from Lusaka because of the high cost of living. There is a testimony for all of you. While you've got Naomi Mutale Zulu, who said that we are working to pay rent. Yes, Naomi, this is why you've got to be tech strategic about what you're actually studying. Chituas Mwanza has actually said STEM. He actually cited that STEM, science, technology, engineering, and mathematics courses, HEAL, health, education, administration, and literacy courses. That is correct. And Joy Sakala finally joined in and said, interesting story about government bonds. I would love to know more and how to acquire any guidance. Joy, reach out. You can reach out to me. You can reach out to many other professionals. Licensed professionals such as myself are the ones who can guide you through that process. And that is the first step. But I always give people the advice, get educated, get a plan, and get started. That's a very short way to actually do it. Get an education on them, reach out, and you'll be able to find out a lot more. Stephanie, thank you so much for spending your morning with me. And I wish you a wonderful day.
Thank you very much, Munyumba. Wonderful day to you as well. This is where we get to wrap up. And until tomorrow again, it's bye.
Bye for now.